All right, let's get a check on what's happening with the markets now. We're all for the markets at this point. You see on the screen for the NGX, that's 108,000, still maintaining that point at intraday, 0.10% down, though. There's a pullback there, which is expected. You know, we touched 109,000 last week. Definitely, there's a lot of resistance because that was the previous high. So we're seeing a mild pullback at intraday, but that might flip by the close of trade today. We're definitely watching out for that. JSC all share index, that's up 0.14%, 92,295 points. Look at other markets we track. The EGX 30, that's North Africa, 0.54%, 31,746 points. And for the Nairobi Stock Exchange, for yesterday's trade, Monday, that's 127.22 points for the all share index. All right. Let's talk to Mr. Ambrose Omodian now to bring us up to speed on what's playing out with the markets, how the corporate earnings, impact and economic events impact most of these stocks. Great to have you on the show, Ambrose.
Yeah, thanks for having me. Actually, anywhere in the world, corporate earnings is what price feed on, especially when these numbers are healthy. And I can tell you that across the globe, including Nigeria, we have seen healthy numbers emanating from quoted companies or listed companies across the globe. But in particular in Nigeria, we have seen our market in another dimension. The corporate earnings and the fundamental of the market are looking stronger and better. When I mean fundamental of the market, looking at liquidity and the corporate earnings, these two go together. When you see a market that has liquidity and we are seeing a better number, prices are bound to look in the green. And people have experienced, from the first day of the month of May, that till the last 2 days we have seen a pullback, for profit taking. And don't forget that anywhere where you're seeing a market rally for almost 5 days, we expect to see profit taking, which also part and parcel of market inflation. I believe that the up and down movement in stocks or any market creates opportunity for investors to buy. That means what we are seeing a pullback on Monday and yesterday, why today market was seeing little stability, investors will not buy it, rather it will buy into value as earnings are reviewed, where companies are going this current financial year 2025.
Right, and definitely we know investors, they like to pay into what's happening, with the financials of most of these companies. So talk to me about, the performance you've seen with our stock market so far. How does it compare with the corporate earnings trends, we've seen? And let's take it far back now, maybe for the past decade.
For me, I would say that our market are really feed on corporate earnings. Look back to, let me just start from post-COVID-19, 2020, when the market hit 11 years low. We saw a kind of recovery for straight 6 years now because companies on the exchange have performed impressively, and price have feed on this number. Why is this earnings very important? Price feed on it. Why also it makes possible for investors also to expect dividend from their company where they are invested. And companies on the exchange have delivered by paying increasing dividend to shareholders. That also reflects on the price. For me, this is what every design investor wants to look at when buying into any company, because that is the only shortest way to assess a company or a management if they are doing well. Even if these numbers are looking up, it gives investors the courage to increase their stake in that company. That's why sector rotation also continues, where they are seeing numbers missing target or projection of the company on the market. They start also selling up to go to where they see opportunity. And that's why I tell you that in any market, whether in Nigeria or not market, sector rotation and also balancing will stay continuous thing. And because of what, since earnings are looking better, people are looking at which sector, which industry that we should invest. And for Nigeria, I will tell you that most of the service sectors have really performed well. And we are seeing a good movement in the private sector after they have suffered losses in terms of the FS issue in the previous year. Now there's relative stability in our FS that have impacted their performance. You can see the life of Nelson, the life of Unilever, Cadbury, Nigeria Brewery, all turning positive in their Q1. Starting from what we saw in the last fourth quarter in 2024. For me, it's a good development for the market. That means banking sector where we are seeing this FS impacting positively in their previous year. You can see the first quarter numbers from the bank, we are seeing a slowdown to see the actual business of banks impacting their numbers, not as a result of what FS gain. For me, most of the banks have posted a good number, while others are seeing some also having a decline in their bottom line because of what the impact of FS stability now. When there was once off in terms of moving from 400 naira to almost 1.5, we saw banks, balance sheet or corporate sectors looking heavy. But now that stability, you can see that's very but why those manufacturing sectors that suffered before are now going back because they can plan with a stable world expect that between 1.5 to 1.6 or 1.7. Now with that plan, they can also know what they are doing. Then where you see from 400 to 1.5, that true rate of the manufacturing sector into what into red. But now they can plan with it. If the CBN can stabilize this, and that will help companies for Nigerian economy to also play the part of recovery or growth, I would say.
Right, and we're also in a season of forecasts right now, and we see the World Bank giving some projections for the Nigerian economy. They're saying for Nigeria's GDP that should increase by about 3.6%. Inflation is expected to average about 22.1% this year. Do investors in Nigeria, do they pay attention to these projections?
They do because why I say they do because most of these figures help them to make what informed decision. Especially when it comes to looking at the GDP figure, when you see any economy where GDP is growing, you look at the sector that drove that GDP. That's where many investors want to look at. Also, like in form of inflation, we see that when inflation is looking southward, it gives investors confidence that they are likely to be what rate cut or stability or unchanged for the monetary policy. Because anywhere in the world, policy meeting is focus on what on data, which is our economic data like inflation and the purchasing manager index and also GDP. And we have seen that for the last month, for the month of April, we saw that our purchasing manager was a bit flat, good, and also the all eyes are still on April inflation or consumer price index that will come by any moment from now from Thursday, and also first quarter GDP that will inform what CPN will be doing. But one thing that is very, very telling here, look at the matured economy where we have seen that the tariff war or trade war has pushed a lot of certain parts of this matured economy to watch by keeping their rates unstable, while some even cut to boost their economy because now it's a survival of the fittest. I believe that our own monetary policy or CBN to look in and say how can we drive the economy, especially with the target of saying you want to achieve $1 trillion economy. You must put the economy in a drive that it will attract investors and also growth for people to bring more also what they have to invest in the economy. But if the economy is still dragging feet, your target of achieving a $1 trillion economy, they think that will be like a story. But I believe that if the fiscal authority will work it out by giving us the security, and also the CPN can also come with a good interest rate by even cutting it or leaving nothing, cut to make that people have access to cheap funds that will also support the economic growth and also drive this corporate earnings to that are positive as that grow.
Definitely. We know inflation, exchange rate volatility. We've seen that impact, investor sentiment, so far in the country. But with what we're seeing, currently, are you seeing a tailwind or a headwind, for, earning power of most of these listed companies? I know you did mention that, the FX losses, seem to be, calming down, at this point. So do you still see the Naira staying strong, going forward and, being a tailwind for most of these companies?
Yeah, actually, I would say that when you were having a headwinds, there was a lot of challenges. We saw companies on the exchange posting a better number, especially for 2023 and 2024. Now that we are seeing stability in FX, that should be a plus for them. And also, if there's a further move by CBN to reduce rate, that also kind of boost performance in Q2 and going to the future. But I believe that Nigeria corporate body have master or kind of study the environment we are. They are catching on this inflation and also the headwinds to make profit. I mean, anytime there's a good, better economic indices, it's a plus for them. I believe that if there will be kind of interest rate cut or even on change again for the next FPC meeting, with what we'll see them doing in 2024 and first quarter, most of these companies will still put a better number in Q2 because nothing has changed as I will speak now. Apart from saying that the matured economy was seeing the volatility in terms of fear of uncertainties, global recession. But now with China and the US trying to move to the same direction, that means the fear of recession is also cooling, and that also will be a plus for our economy. If our economy managers look inward and see how they can also drive our own, not just looking at what is happening globally, we need to put the economy in the path of what quick recovery and growth so that we can attract more investment within locally, not only international, local investment that people have confidence to put that money because if cost of running business aside, because of high interest rates, I tell you, also slow the work, slow down growth anywhere, anytime.
Right, and talking about international, talk to me about how earnings from multinational corporations, for example, Nestle and MTN Nigeria, how they differ from local firms in response to most of these economic shocks.
When it comes to international companies, now because in most of the domain where they operate in, there must be a lot of little G trade here and there because of the tariff. But with point we're seeing now, contraction we're seeing that the little stability. I'll tell you that in mature economy, we have seen that most of the earnings there were healthy. Process we are seeing here in Nigeria. That means they understand the environment where they are. That's why when there was this issue, because that most companies that are operating international is where investors are giving what are putting money. So they believe that if in this environment they are being hit, another environment will make money to also impact their bottom line. That's why strong left US market for for Asia, for Europe, and for Africa. I believe that if MTN is well positioned and Nestle, because most of them, their market is Nigeria here, I don't believe the impact of tariff will impact them negatively as such. But I believe that with them having a broader market in Nigeria here, and also they are still investing in the equipment to give us the better service. Because I speak now, but I'm not saying a service that coincide with what we have increased in terms of their service rate or their tariff. We want more service, but if that happens, I expect to see more gain or more positive earnings from those companies. And Nestle also have moved to a profit position after they're able to put their accounts together. And also don't forget that because of this free trade zone in Africa, Nestle have opportunity to sell in Africa continent. That will also be a boost for them. Really, they have Nestle in Nigeria, Nestle in Ghana, and in other Africa. For me, it's a plus also for Nestle.
All right, so shifting focus to MTN now, we see the group did report some stellar earnings there. Service revenue rose about 10% overall. We're also seeing that with constant currency, so far that has somehow, that's from MTN Nigeria. What we've seen happening with their earnings, that has somehow boosted the earnings for the group. Is this something we're seeing more of happening going forward, or is this just a blip at this point?
No, for me, we expect to see more of improved numbers from MTN. Sorry, because yes, they've federal government have approved almost 50% hike in tariff, which they call cost, which is also good for them. And also, like I said, because we are having relatively stability in FS between 1.5 to 1, some companies have planned to 1.7. Within that range, if it remains, then they can manage it. But then when they go beyond this range, it will become a problem. If the FS remains this range, I'll tell you that most of the companies that bounce back going to face more better number going to the future. For me, it's a good one for MTN. All that they need to also kind of more, how I put it now, it will also up their game in terms of service because most of their network are not working effectively as expected. Even though when they have hit their work, the cost of tariff, they need to work on that. That is what we want to do. Yeah.
Right, but so we see a positive impact now from what's happening in Nigeria, and that's impacting the group positively. Do we see what happens with the group, impacting MTN Nigeria positively?
Yes, I see it's a win-win for them because MTN Nigeria is to have a market here. Even I know that yes, MTN South Africa don't have much because this MTN Nigeria, South Africa is different, but because of that name, yes, they might have a positive impact, but I believe that the market where they operate there is also improving environment for them. Because one, I will tell you that the consumption for data because of people that these days are doing lots of things online, that's where on now. I believe that also improves their performance with increase in price anywhere in the world. When there's increase in price, either in commodity, in service, it's how you work a part in your bottom line. Really be able to manage your cost at the end of the day.
Right. Let's look at uncertainty now. We see how uncertainty has boosted the price of gold over $3,000, hitting about $3,500. Do Nigerian investors prioritize dividend-paying stocks over growth stocks during economic uncertainty?
Yes, it depends on your investment objective and also your goal. For some, they want to go for defensive stocks, while some that understand the game of investing in good stock want to take advantage, especially if the sector have opportunity of what expanding, and also the company is launching out what to increase its market share. That's why it depends on your. For me, you can do the defensive with stock that are stabilized already. While growth stock that has stock that you know that yes, the numbers going to put, because I said earlier that price feed on earnings. And if that number is coming as that, I expect to see a gallop. A good example of one of the companies that I know that in Nigeria have really demonstrated the power of earning power and payout. I think the life of NACO PS in Nigeria, and NACO 3 years ago was still around 7 naira. Today NACO hit about 85 naira before marking down on Monday. That's hard to go because the company are constantly grow their earnings and also grow their payout that impacted investors and for them to have more confidence and increase their stake in the company. For me, that is how we look at growth company that also that multiply into what into a defensive stock with time. The way they are going now, other companies that were identifying invest data that has that character, that quality that now as a good company you can start keying on the next 2 or 3 years also take, because people have invested in NACO at 7 naira, at 8 naira, they have made 85 naira, they have made money. Even though we are not looking for dividend, that also have given them a lot of money. That means as investor, you invest your investment objective for what you are trading for. That's what to guide you where to gain. There are some that want to buy stock today and sell the next, they make 10% and go. That's want to gain the company and stay for 3 years, 2 years. As I say, your investment objective or your trade plan is very, very important in any market you are trading.
Right, I guess as long as you're in these markets, you definitely need to have a plan, for your entry and your exit. All right, let's look at trading today. Where are you seeing it swinging to? Do you think the weakness we saw starting the week continues for the NGX?
Yeah, for me, the pullback we saw. The one thing that when we are seeing that market breadth is expanding, the mix of pullback, there are some investors that have opportunity to buy into value. But market pulling back today again for me, it will be on a reduced momentum, if at all, because we are seeing that more stocks are on the gainers chart than the loser as to speak. But it's because we see one high cap top on the loser chart that weight on the index. That's why I say investors that index is not the only indices to invest in Nigeria stock. Look at the central index to take your decision. But I believe that companies have reduced some value that you want to buy. Don't look at index alone to judge the market, but look at where there's something happening, especially looking at their numbers and also what the sentiment of the market, especially as far as I stay on what from the economic data we're looking at, expect to come between now and Thursday. That will give more information. Also, when we see also Q1 number for 2025, that also give us more information. But for those that are in this market, looking at the corporate earnings that came from first quarter, it's matter what happened to our GDP for first quarter. That is that people like to also be in green to see a marginal growth again, because we have seen that most sectors of the exchange have put the total number.
Urban shares have run out of steam after Monday.
All right, thank you so much, Ambrose Omodion, there for giving us what's playing out with this market and how investor sentiment is impacted by economic forecast and all of that. He's a Chief Research Officer at Invest Data Consulting. Thank you so much.